This video is brought to you by Nebula. Yesterday, the British Chancellor Jeremy Hunt announced his much-anticipated annual budget. We're writing this before the budget has actually happened, but a well-sourced report from the Financial Times suggests the most significant policy in there is a 2p cut to national insurance, which translates to about £450 more in the pocket each year for your median British worker. This policy will apparently be funded by targeted tax rises on stuff like vapes and tobacco, and the axing of the UK's controversial non-dom status, which allows UK residents to avoid paying tax on income earned overseas on the grounds that their permanent home or domicile is outside the UK. Ultimately though, the details of the budget are sort of irrelevant. Tinkering with the UK's overcomplicated tax regime for a few months before Labour come to power obviously isn't going to fix the UK's long-standing structural economic problems, and the fact that the Tories tried exactly the same tax cut last year to no political avail suggests it's unlikely to make a difference in the polls. This has created a sense of pointlessness around the budget, exacerbated by the pervasive sentiment that the UK has, in some sense, run out of money. This notion that there's no money left is apparently shared by both the Conservatives, who justify the meagreness of their fiscal policy on the grounds that anything else would be irresponsible, and Labour, who've been remarkably restrained about their spending promises and recently U-turned on a hallmark policy of spending £28 billion a year on green investment. But while it's of course true that the UK's national finances aren't in a great shape, the Treasury is perhaps not quite as constrained as the two main parties made out to be. So in this video, we thought we'd take a look at why everyone thinks the UK's broke, why some of those arguments are questionable, and try to best answer the question, has the UK actually run out of money? Before we start, if you haven't already, please consider subscribing and ringing the bell to stay in the loop and be notified when we release new videos. So before we get into it, two quick disclaimers. First, we're not saying that the UK has got loads of cash to spare. A combination of factors, including sluggish productivity, an ageing sickly population, and rising national debt, has put an undeniable strain on national finances, not just in the UK, but across Europe, which is why so many European economies are currently flirting with austerity. Rather, we're just trying to say that things might not be quite as tight as both Labour and the Tories are currently making it out to be. Second, whether you think the UK has run out of money in some sense will depend on your political leanings. In general, if you're on the right on economic issues, i.e. a fiscal conservative, you'll be more wary of government borrowing and inflation, while the reverse will be true for those on the left. In practice, this means that those on the right will be generally more anxious about further borrowing, and thus more likely to concur with the sentiment that the UK has indeed run out of cash. We just want to stress that we're not taking a side on this. We're not necessarily saying that borrowing is good per se, but just that some of the arguments used to motivate this idea are questionable. Anyway, disclaimers aside, let's get into it, starting with the so-called fiscal headroom. When talking about government spending, ministers often talk about whether the government has the headroom to cut taxes, or the headroom for further spending. This metaphor suggests that there's some sort of strict upper limit on spending, and if we try to go above it, we'll bump our metaphorical heads on this metaphorical ceiling. But this headroom is actually a consequence of the government's own fiscal rules, set in November 2022. Specifically the one that says the national debt should be forecast to be falling by the year ending March 2029, as forecast by the Office for Budget Responsibility. To maintain their economic credibility, Labour have resolved to stick with the current fiscal rules, which is why they're also respecting this headroom. But this is a bit mad for the simple reason that economic forecasts for 5 years into the future are at best uncertain and arguably meaningless, which is why the IFS has described the target as, quote, ludicrous. On top of that, the government has made some frankly implausible assumptions about stuff like fuel duty that basically imply that the government is going to rake in far more tax in 5 years' time than it actually will, which is why the chair of the OBR has described their spending plans as worse than fiction. All in all, this headroom is a consequence of self-imposed arbitrary fiscal rules that are being gamed by the government anyway. Another big reason British politicians think we've run out of money is the Truss Experience. Essentially, when Truss announced a series of unfunded tax cuts, i.e. tax cuts without the accompanying spending cuts, the UK's borrowing costs spiked. The lesson that the UK's political class learnt from that experience is that international capital markets don't want to lend much more money to the government. But while there's clearly some truth to this, we shouldn't overgeneralise from the Liz Truss experience. For starters, Liz Truss was uniquely unpopular with capital markets. But second, borrowing costs were already rising because the Bank of England was engaging in what's known as quantitative tightening, i.e. selling back government bonds that it had bought up during the pandemic. More government bonds on the market means less demand for new ones. So when the government issued a whole load more bonds, the demand wasn't there and borrowing costs went up. And third, this problem was exacerbated by pension funds, who dominate the gilt markets. Basically, to cover their losses from falling bond prices, pension fund algorithms automatically sold more bonds, creating a negative feedback loop which was only resolved by Bank of England intervention. Now, the final reason the UK might not actually be running out of money is the UK's unique way of operationalising monetary policy. This is a bit complicated, so we're not going to go into too much detail, but the basic issue is that, since 2008, central banks have been engaging in quantitative easing, which involves buying up mainly government bonds to stabilise bond markets and keep government borrowing costs low. Now, for basically every other central bank in the world, including the Fed and the ECB, when borrowing costs rise and bond prices fall, as they are currently, the central bank just accepts the losses. But in the UK, the Treasury is expected to compensate the bank for these losses, to the tune of about £35 billion in 2023 and £40 billion in 2024. This is, frankly, an enormous amount of money, and it should be a bigger story in the media. To put this in context, this is a bit less than the UK's entire defence budget, or about 10% of all day-to-day spending. And it's wild that, at the time that the government is flirting with austerity, it's giving £40 billion a year to a central bank that can't actually go bust. All in all, while the UK finances obviously aren't in great nick, it does look like a rigid application of arbitrary fiscal rules, an overwrought anxiety about the power of international capital markets, and our unique way of operationalising monetary policy aren't doing us any favours. If you want to keep learning and expanding your knowledge, then I'd recommend you check out Wendover Productions' brilliant series, The Logistics of X. You likely know Wendover already, but in this series they dive deeper into the logistics and operations behind everything from search and rescue operations to ski resorts and coal mining. One episode I think you'd particularly enjoy is their latest, which gets into the logistics of weapons manufacturing, something that's key to a number of topics we discuss regularly in TLDR videos, and something that directly impacts wars and conflicts all around the world. It's a brilliantly researched and thorough series, and it's exclusively available on our streaming service Nebula. As you likely know, Nebula is the service we built with a bunch of our creator friends, and is the home to tons of smart educational content from all of your favourite creators. The best part is that by signing up, you not only get access to exclusive series like The Logistics of X, Modern Conflicts from Real Life Law, or China Actually from Polymatter, it also directly supports TLDR. That's because when you sign up, you contribute to the budgets of these big budget documentaries and help us grow and expand our ambitions. If you want to get more superb context and support TLDR, then if you sign up using the link below, you can support us directly and get Nebula for 40% off their annual plan. That's less than £2 a month. Thanks for your support and for backing Nebula.